Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. I hope, like me, you've had a wonderful weekend and are looking forward to a very exciting week ahead with Bitcoin. And certainly today, and like every other day, is a wonderful and exciting day to start off and to make it what we can so that we can make it a very exciting and very valuable day in terms of our learning. And in today's video, I'm going to be looking at the 4-year cycle perspective and how that framework really will help us in terms of making decisions in the shorter term and in the medium term. But as usual, before I begin, I want to give you the polite reminder. Please remember, I don't know what's happening tomorrow, so I'm only giving you my perspective with the charts, and I can quite easily be wrong. So please don't take anything in the video as financial advice. So please do your wider research before you make any investment decisions. So with that out of the way, I'm going to start off on the BLX chart here, and we're on the monthly time frame. And the reason why I want to show you this is why the current narrative that we have, and we can change our narrative at any time, and that's how emotionally intelligent people do. We don't get caught up in the analysis. And there is a very important point here. I've been watching a lot of videos with many other YouTubers who certainly give the impression that they know exactly what's happening this week and next month and next year. They give that impression, and you see the comments from people who actually give the impression that they definitely, there's so many definitives here, that they definitely know what's going to happen. All I would say to that is that please never ever get caught up in your own analysis where you think definitely that you know where the Bitcoin market is going over the next few weeks, few months, and few years. The truth is no one really knows, even if we want to pretend that we do. It's also actually very dangerous to believe that you think you know, because you end up ignoring the true realities of what's really going on and what's really developing in the charts with the price action, etc. And those people who pretend to know, what they do is they go into a denial phase, which will actually hurt them in their pocket eventually. So we must keep adjusting as the market adjusts and not believe in our own crystal ball powers. As you know, my current narrative here is that we've topped off in November and we are in a 12-month bear market. And that is based on this chart here, as well as many of the reasons I've given you in the past. So if we measure from the low of the previous bear market to the top of the next cycle top that we have, i.e. the end of the bull market following the bear market here, then we can see that in the first cycle, measuring to this candle here where we topped out, was 37 weeks, i.e. 37 bars here. So that ended the first cycle top that we had. And in the second cycle here, the next 4-year cycle, we took the bottom here after the 12-month bear market. So that was the first year of the cycle. And then when you take it from the low here of that bear market to the top of the 2017 end of the bull market at that point, we had 35 bars here, 35 weeks, which is very similar, as you can see, to the first cycle. And currently, when we bottomed out at the end of the 2018 bear market, which was this candle here, to the top that we came to in November at 69,000, as you can see, we had another 35 bars. So we've now got 2 cycles which are exactly the same at 35 weeks, and one previously, which was 37 weeks. And since the top that we got here at 69,000, we're now in our 40th week, which doesn't tally. So when people say, have we got an extended cycle? I think the cycle's gone on too far to be an extended cycle. Maybe a couple of weeks, maybe 3 weeks. But to go 5 weeks past the top, maybe stretching it a little bit. But we remain open-minded. We never know that the current relief rally may go above the 69. We've got to keep open-minded to that. So have you found value in doing this? So what this does is it gives us a framework to work on from the cycles point of view. And it gives us some sort of a plan during the bear market for taking advantage of the relief rallies. And if the price action changes along the way, then we obviously adjust to that and change our narrative as well. And in previous cycles, you can see the important thing to note here is that we had a blow off top. Can you see a massive blow off top just a couple of months or 3 months before we got to the top here? And same here, we had another blow off top there, but you can see quite clearly there was no blow off top. It's very flat. We had a double top here. And the reason why that's important is that when you had the blow off top, then this was followed by a very savage 85–90% fall afterwards. And similarly in the second cycle, we had another 85% fall here. And what we need to just understand is that perhaps, and it's only a perhaps, that we didn't get the blow off top here, So maybe this is not going to be followed by an 85% fall, rather the kind of fall that we've already had down to 28,800. You may not want to believe that. However, if we had a look at the weekly chart and we had a look at the green line here, which is the 200 weekly moving average, it gives us a clue as to where the bear market will come down to actually bottom out. So after the first cycle top that we got here, you can see that the bear market came and rested on this green line, the 200 weekly moving average. And that happened on a few occasions, 3 times on there to bounce off before we went into the next 3-year cycle of that 4-year cycle. And once again, in the second cycle, once we topped out at the 20,000, we came and rested on the green line once again before we went into the next 3-year cycle here to the tops that we've just made now. Now, if we look at where the green line is currently, it's actually at around about 21,000. However, if we have a 12-month bear market, which takes us to the end of this year, what we need to do is just extend this green line and see where it gets to around about the December time. So if we take the trajectory of this green line and just stretched it out and try to match the actual direction of travel to around about December. So this pink line now is the first week of 2023, next year. So what we're saying is that in this downward trend that we've got with the relief rallies along the way, we're going to hit this 200 weekly moving average around about the December time here, if this continues with this trajectory. And that would bring it more in line with the falls that we got here back in June, July here. So can you see there's a confluence of factors here that it may well be that because we didn't have a blow off top at this point, it may be that we have a flatter fall in the bear market that we're in now. And this would seem to confirm that that is the case. And only time will tell, but it just seems interesting that we can work out with this type of trajectory forward of where the market may well be going. And of course, our narrative will change as the price action changes. So, okay, we can do the shorter term analysis, exactly what's happening currently with the Bitcoin price. If we go to the daily chart here, we can see quite clearly, as I mentioned in the previous tweets that I did last week, this is the tweet that I did last week, that when we come up to the 200 daily moving average, which is the green line here, that we can expect a rejection and a pullback from these points there. And this is exactly what we've had so far. The other thing of note here is that if you notice that the candle that actually came up to that point was a shooting star candle, which is again a reversal candle to the downside. The long wick is a sure sign that there is a rejection of higher prices and that the market wants to turn back to the downside. So that gives a very high probability that this is what's going to happen down here. And if we put the Bollinger Bands on, you can see that we were also at the top of the Bollinger Bands. So with 3 confluencing factors telling us that there is a pullback to be had here, this is exactly how the market has actually played out. This was also telling us something very, very important, and that up to the run up to the top that we've just had at 48,300, we had 8 green candles, which obviously is a sign that we're being overbought here. And that maybe we would do a retest of the previous key level here at 46. Obviously the market came down lower levels than that at 44,200. But just to keep everything in perspective here, if you think about it, we came from this low point here back in mid-March, where the market bottomed out at around about the 37.5 mark. We came up here at around about a 28% increase, and the current fall from these levels is only around about 8%. And with the volatility that we know that Bitcoin has, then that is really not much of a pullback anyway. And if people are getting frightened of this kind of a fall, then maybe this market isn't for you, because these are what you have to expect with Bitcoin. If you want to benefit from these, then you have to put up with these. The most important candle at this point here, I would say, is this candle here, this green candle. And the reason for that is that if you look at the wick here, this long wick at the bottom is telling you that there's a strong rejection of prices in this region here, and that the demand is very, very high and it got bought up very, very quickly. And the reason why this is important is, if we look back in the recent history down here, this candle with a long wick at the bottom, sometimes people call this a spring to bounce back up from, then the last time we got that was over here. And I mentioned this candle at the time. And that established a bottom here. And the one before that was this long wick here. And I remember explaining this at the time, that this long wick is an establishing of a bottom here, which exactly happened there, and currently we're getting a similar type of a bottoming here. So for me, this rally here and where we've now topped out in this short-term price range would tell me that this is the short-term price bottoming for the next leg to come. So we mustn't really lose the bottom of this wick here, which is at 44,200, because that could put this rally in a little bit of a danger. If we have a look at the 4-hour chart, we can see that we've got a declining trend line here at the top and an ascending line here. So we've got a symmetrical triangle and the price is now coiling into this apex of the triangle. So we're hoping for a breakout in this region here. And we can adjust the bottom line here to take into account the current price action. And this is why I don't like these diagonal lines, because you can just keep readjusting them. But it does give us a visualization of where the market may be heading and what kind of a pattern it's making as well. For those with a discerning eye may notice a very brutal 4-hour candle here. Yes, this one here. The one with a long wick at the top. How many times have we seen this? And it basically orchestrates a merry dance afterwards. So it may be we go sideways from here, but the bottom of that wick has already broken down to the downside. So it may well be that that's giving us a clue that this rising demand line here is more likely to break to the downside, to maybe retest these levels here again, to frighten more people off and shake them out before we go on to the bigger run. The reason why I'm not too concerned with what's developing on the 4-hour chart is that if you look at the weekly chart, what's really bullish here is that the current week that finished last night at 12 o'clock UK time, we still closed at this point here at 46,400. And what that's telling us is, as I've shown you many times before, this candle here, we needed to get above the wick of that one, as well as above this one first. So we've got above this one, and now we're still holding above this candle, as well as this wick here at 45,855. So 45,855. As long as we can hold that level throughout this week, then all this action will be invalidated here, and we'll be good to go to the upper side. So in conclusion, what we really need to have a look at is that the price action really needs to get above this 200 daily moving average, which is currently at about 48,300. And we must hold this support line along the way. So what you can see is that it looks to me as though we're going to be range bound between these two levels, perhaps for the next few weeks, before there's an eventual breakout to the upside. Another way of looking at this would be that this was our trend line here, this neckline, and then ascending line from this point here. And we broke out last week with this candle, and we've just come back and found support here. It doesn't mean that we can't find another retest of this support, but the fact that we're still above this neckline here, which was a very strong resistant point with the bodies of the candles here at around about 44.5, and we've retested it once. We may retest it another time, maybe two or three times more. But the fact that we're above it tells us that the price is still in a bullish mode. So for me, the narrative is still to the upside, whilst we have to be aware that if we break some of these key levels, especially the bottom of this wick here at 44,200. And as long as we're okay with that and above it, then we're fine and there's no need to panic. I was going to do a little bit of Ethereum today, but there was so much to do with the Bitcoin. So I'll try and do Ethereum in the next video. So we'll leave it there. I hope you found value in the video. And if you did, then please do remember to like and subscribe and to turn on the notification bell. If you want to leave any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.